Good morning. I am Anuj Singhal, and this is your pre-market setup. Well, what an untradeable market this has become, really. On Monday, if you had taken a long position, yesterday you would have been stopped out. Yesterday, you could have been tempted to take a short call with the market breaking down, and there's a good chance that today morning you are stopped out. So it's an untradeable market. The only point is that you have two reference points now: 68.69, which was the low, and yesterday's high, maybe 72.04, or if you want to increase it to 72.41, which in any case, as I've been saying, is a big resistance point. And within that, you're likely to see a lot of volatility. Short point is that the bear market rally is intact as long as you hold the previous low of the 68.69. If you look at the FII data and the DII data, it's on expected lines. The FII selling is down, but the DII buying is down even more aggressively. And that was the function of market volumes yesterday. Market volumes were extremely low, so the liquidity was not there really to sell or buy too many stocks. And that's why you have seen the FII net selling come down. But the DII net buying is down a really big time. That's a bit of a problem. The other interesting nugget is that for last 4 or 5 days, FIs have been buying index futures and have been creating long positions. So much so that from being only 41% long on the market in terms of index futures when the series started or when the year started, they're now 55% long on index futures, which is really interesting because if the market does not rally from here on, in that case, what would happen to these long positions? So that's really something that's the most intriguing data. Options data is telling us that smart money is using the high volatility to sell 7200 put and 6900 calls. So there's a good chance that the market remains in this 300-point band. It may remain volatile in that 300-point band to suck in a lot of put buyers and call buyers. At the same time, the smart money uses that to sell option. That could happen. As we move towards the expiry. Keep in mind the budget is in next series. So while there would be a lot of talk about budget, there will be still 3 or 4 days of March series before, or 2 or 3 days of March series before budget takes place, or maybe one day of March series. But the short point here is that the Feb series does not have to deal with the volatility of budget. So in that sense, this is still a good chance that the smart money would want to use high volatility to sell options and make money. What should you do today? Again, take small positions depending on what the market is telling you. This market is giving nice intraday opportunities. On Monday, market opened gap up and continued to go down. Yesterday, the market opened a gap up, but immediately turned and then kept going down. So the market is giving you intraday trading opportunities. Don't carry forward your positions though. That's not a market in which you are right now where you want to carry forward positions.